3, 2, 1, 0. Ignition. Liftoff.
Good morning, good afternoon, and good evening to everyone tuning in. My name is Nick.
And I'm Yuri. Thanks for joining again. This is Moontower HQ.
Up for discussion this week is the use of stablecoins for regulatory arbitrage. First, let's define what regulatory arbitrage actually is. In general, regulatory arbitrage is a practice where firms capitalize on loopholes in regulatory systems in order to circumvent unfavorable regulations. Arbitrage opportunities may be accomplished by a variety of tactics, including restructuring transactions, financial engineering, and geographic relocation to amenable jurisdictions, or through the use of specific asset classes such as Bitcoin and Tether. To give a real-world example, we can take a look at China. China currently has a limit of $50,000 US that one person can take out of the country. Yet, what do you do if you're a Chinese business mogul and you need to expatriate your funds and make them mobile outside of the country? Transferring $50,000 a year, might I add, is going to take quite a lot of time to be able to actually get all of your assets offshore. So there are a couple of ways in which regulatory arbitrage comes into play here, where a person or persons could get their money outside of China or any other regulatory capital restrictive country to other areas. When talking about China specifically, one can look at the west coast of Canada, for example, Vancouver. And this has been getting more and more restrictive as time goes on with various regulations as these loopholes have been closed. But suffice it to say, the general premise is an individual that is a Chinese national would have a student come and immigrate into Canada. They will be immigrating most often on a student visa or an investor visa, in which case they would contribute a certain amount of capital in order to be able to fast track their landed immigrant status. With this, they would purchase certain amounts of assets in the form of housing, particularly West Vancouver, which is one of the reasons why the pricings there are completely through the roof. Actually, the more amount of money something is worth, the more money you can take out of the country. But anyways, whether they're doing it through the investor visa or whether they're doing it through the student visa, the individual now comes and lives in Canada going to school. While they're in school, they of course need a place to stay. Where they end up staying is the house that supposedly they had bought, when in reality it has been bought and paid for by the family. Living in this house allows them to circumnavigate a couple of foreign investor restrictions that are put in place in BC in particular, and taxes as well for properties that have been vacant for quite some time. Once this is complete and the individual has completed their schooling, the house then goes back on the market. When the house goes back on the market, technically speaking, the funds that you get are now situated in Canada. And whatever the cost of the actual house is now ends up in the pocket of a Canadian, technically landed immigrant in a Canadian bank account. One of the other ways that capital flight has been occurring in China in particular is through Macau. In Macau, for those who are not familiar, it is the Las Vegas of Asia. It boasts actually higher numbers in terms of money flows in and out than Las Vegas itself. So technically, it could be considered the gambling hub of the world, in this particular Asia. The way that that operation works is there's something known as junket operators. What they are, they're essentially high-end tour agents that make a living transporting Chinese gamblers to and from Macau, as well as also arranging their accommodation, and crucially, their casino credit. So what happens is that these Chinese citizens would borrow money from the junket operators, who are again a Chinese company, to fund the gambling. This looks like a debt or a loan on paper, so you can put towards it as much capital as you see fit. Then what ends up happening is you now have credit with a casino through this loan. You head to the casino, you pick up your gambling chips, and you go and head to the tables. The thing is that these chips are actually what are known as dead chips, meaning that they are not redeemable directly for cash. But when you play them through the casino, you do get real chips in return, which are then redeemable for cash. And this is why you notice when there is a particular casino and you see certain players of Asian ethnicity playing a particular game, for example, like Baccarat, that's because statistically speaking, the house has the smallest edge. So if you play consistently at that table, you are guaranteed more or less to lose only between 1 to maybe 5% of your total capital over the long run, which for you as somebody who is moving capital from one jurisdiction to another is exactly the goal. You want to play through all of the chips, but you want to lose as little of them as possible. And then with those chips, once you have them available, they're redeemable for US cash or anything of the sort. Recently, there has been a third strategy, and this involves the use of tether. Yuri, I want to ask you, what are your thoughts and experiences in the past, having been quite active in the brokerage space, where Asian clients would prefer the use of tether? What do you think?
Definitely, there has been a surge of use of tether in regulatory arbitrage, especially when it comes to the Chinese clients. And I haven't had too much hands-on experience with them, but from what I hear in local markets, especially in markets such as Russia, for example, there have been lots of transactions, an increase in transactions when it comes to tether, because what they do is that Chinese merchants normally have lots of merchandise in Russia that they have to pay for in China with the Chinese yuan. However, both Russia and China have currency controls in place. The Chinese currency controls are much stricter than the Russian ones, but Russia still controls the outflow of money. And it is quite difficult to move Russian rubles into China. So what Chinese merchants do is when they accumulate a certain amount of Russian rubles in Russia, they convert the rubles into Bitcoin, and then they send the Bitcoin to China and convert that Bitcoin into yuan in China. But because in the recent couple of years, they learned that Bitcoin can be extremely volatile, and I am sure that quite a few of those suppliers actually suffered during the bull and bear and the following bear market in Bitcoin. I think they figured out that maybe a better way to actually move money would be through something a little more stable. And that's why stable coins are actually gaining steam right now. So one of the most popular ones, actually the most popular and the most liquid stable coin out there is Tether USD. So right now, the Chinese merchants switched to purchasing Tether USD from the same Bitcoin brokers in Russia, in Moscow, and other big cities. And they sent Tether to China, and the local brokers in China convert Tether into yuan so that they can pay their suppliers in yuan. All of this includes obviously transaction fees on each side, both in Russia and in China. Brokers charge something, but that's the cost of doing business. And if before, I heard of figures such as 10, 15, even 20% at times for moving money around, then right now, thanks to cryptocurrency, Tether in particular, these fees have been lowered. For example, in Russia, you can exchange quite a large chunk of cash into Tether for about 2.5%. And I believe in China, it's probably about the same, maybe even cheaper. So I believe, the ceiling would be close to 4 or 5%, which for the Chinese merchants is an acceptable cost for moving money and moving money efficiently, that is. So this is my experience. That's what I hear from the market, and I'm sure this happens as well in other countries. For example, I've heard similar stories in India, and finally, it is still the same Chinese merchants who trade in India, they sell their goods and services, and they have to pay their suppliers back in their homeland in yuan. So it's exactly the same story. They buy Tether in India and send it back to China. So I would say stable coins and Bitcoin are definitely taking their fair market share out of this so-called regulatory arbitrage market, and out of the so-called shadow banking systems as well. They are essentially replacing these Hawala systems that are very popular in the Middle East and Asia right now.
Thank you very much for that insight. There's definitely a lot to be said when it comes to regulatory arbitrage in all of those areas, and particularly to hear of the types of transactions that exist, I think is very interesting, not only for myself, but I'm sure for the audience as well. I believe in East Asia, there was an article written by Cointelegraph which stated that the on-chain volume devoted to Bitcoin was actually 51% of transfers by volume in general. The rest consisted of purely of stablecoins, and something like 94, 93% of that was USDT. So Tether is most certainly the dominant currency when it comes to these types of transactions. I think that the governments are also aware that this is happening, and one important thing to note is that this type of regulatory arbitrage is completely legal, in the sense that what these companies are doing on both the grounds at home as well as on international markets are actually regulated, first and foremost. But the laws so far that exist within the nation just have not caught up to be able to accommodate for something like this. And it has been changing gradually. In China, for example, the USD trades have been clamped down by OTC brokers who continue to sell the stablecoin for these purposes. Yet it's not directly outlawed, because there is still a value for Tether when it comes to dealing with cryptocurrencies in general. So for example, really, Tether had come on the scene as a means for altcoin exchanges at the very beginning to be able to have their users hedge out of volatile assets, exactly as you mentioned, Yuri, into something stable, such as the US dollar. But because they were unregulated and still are, they weren't able to actually hold US dollar denominations on their platforms. In came USDT, which is supposedly backed, by US dollar. We have found out recently that it's only about 3/4 backed, perhaps even less, but that's a topic for another day. The point that I'm trying to make is Tether originated on the scene as a means of providing this type of this type of hedging mechanism. And this is the mechanism that a lot of the Asian OTC brokers utilize, and on the surface report to the government, so as to say that these are all internal trades. What is happening here is that clients are selling their Bitcoin, selling their altcoins to the OTC firm, who are giving them back USDT in an effort to hedge against the volatility risk or to exit the investment. What the client does on their side with the Tether is completely up to them, because as we all know, it's quite easy to move digital currencies from one address to another, and the location of the owners of those addresses are relatively independent of where and how the transaction was sent. So this system is continuously evolving, and the governments are also trying to do their best to fight against it. I think with China in particular, where they're heading, and as we've seen the entire issue with the pandemic and the way that the lockdowns have been put forth, China has been more or less a showcase of how to handle a lot of things on the global stage. Capital flight and digital currencies being one of them as well. In this particular case, where China is heading is towards a digital yuan. This has been in plans for quite some time, and it is now rolling out. There is, I believe, a specific part of China that has just moved to this system exclusively. So it's already in action, it's already being tested. And this might harbor some ill effects for the greater digital currency field at large, because as the use of that internal currency grows, there's going to be more and more convenience built in for the individuals and more regulatory frameworks to come out for the corporations who utilize anything other than that asset class. And this could very well be a slippery slope. Actually, Yuri, what do you think could happen potentially if the Chinese digital yuan gains predominant use in China as well as its trading partners around the world? How do you see that affecting the Bitcoin ecosystem, for example?
Well, I think the main advantage of using Bitcoin and stable coins like Tether for that instance is that they provide what's called censorship resistance, that you don't really have to ask for anyone's permission to use them. When it comes to the central bank issued cryptocurrencies, whether it's issued by the Chinese central bank or Russian or anywhere else in the world, they are definitely what we like to call permissioned blockchains or permissioned cryptocurrencies. You actually have to ask for permission to use it. It's essentially no better than just a regular bank account. Um, uh, at the same time, we don't even understand why they need a blockchain for that, because you don't really need a blockchain to issue a central bank cryptocurrency or just a regular digital currency. Most of the currency today is already digital, and it is managed very well with the use of a regular database that people normally use in computer applications. It's literally a ledger in which digits are moved from account to account. That's all it is. You don't need a blockchain for something that is centrally controlled. However, that's what they're trying to build, and the main purpose of that centrally controlled currency is to actually control the flow of funds. It will make it much easier for the government authorities to actually censor transactions and to implement all kinds of stricter controls for the flow of this currency. So they can go as far as implement different AI rules that will monitor different behaviors from individuals and corporations, and that will, flag transactions, flag individuals, and suddenly you wake up and your wallet balance is unspendable, right? So because of that, I think Bitcoin will always have a use case. It will always be useful for people because obviously no one likes to be controlled 100%, although a big subset of population doesn't mind being controlled, and they need to be led, so to speak, because most people are pretty much followers, right? But when you have this complete 100% totalitarian control of everything, then even the most following masses will get enough of it, because at least right now with physical cash, with these pieces of paper, you can go to the store, you can just take it out of your wallet and pay for anything you want, and no one will really know what just happened, right? With the yuan or any other central bank issued cryptocurrency, those times are gone. This everything, absolutely everything you do financially is under a microscope, and that is something that I think is on the other side of good and evil, and we'll just have to live with it to some extent. But I think this is where Bitcoin comes in. This is why it was invented in the first place. So if we were to look at the situation from a positive view, which I recommend, is that the Bitcoin is here. Bitcoin is invented for this particular use case, and it will just grow. And this is the Bitcoin's time to shine.
You're absolutely right. And one of the most important things that I agree with what you said in particular is the sovereignty of the money. With all of these types of digital currencies that are being created by a permissioned blockchain via permission blockchain by these governments, the ability of oversight grows exponentially. And I'm sure I'm not the only one that would appreciate being able to freely transact in a world that is growing so rapidly and so quickly. There are so many opportunities to help create new things in the world, not only just from a community standpoint, but also from a global standpoint by investing in the proper businesses, individuals, and beliefs. And with a centrally controlled currency, I don't think that's going to be very possible. So we encourage everybody to take control of their own finances, participate, educate yourself, and move forward with freedom and move forward with gusto and enthusiasm. And with that, my name is Nick, signing out.
And my name is Yuri. Thanks for joining us today, and don't forget to check out moontower.co.